Okay, this is a quick tutorial on how to enter orders for the pulsewave system into the thinkorswim trading platform. I know that your broker may be different than this, but this is primarily, you know, the way it's going to be done regardless of what broker you're using with, just to give you an idea of the different order types. All right, we're going to use Pretty Ricky as our example. As you can see, if you look at your current pulsewave report for this week, that's what you would do. You would look at your pulsewave report for the week, and you would go ahead and put your order in as so. Okay. So in this case, you're going to go in. You're going to do a trade. So you put your mouse on the bar here, and you go ahead and right click on the mouse. When you right click on the mouse, you see this comes up. See buy, sell, buy custom, sell custom. All right, if you click on the buy custom, you have OCO bracket, stop, and stop limit. I always use the one with the stop. All right, so in our example, that's what we're going to do. Okay, this screen now comes up here at the bottom, your order entry and saved orders. Okay, you can default to however many shares you want. I have mine defaulted to 500 shares. All right, so that's just how I have it. So for the sake of this example, we'll go ahead and we'll change this to 100 shares just for this example. All right, now the next thing you want to do, it defaults, I think limit order is the default. So you want to come over here to where it says order. All right, and that's where you're going to change the type of order you're going to use. Under here in the price column is where you're going to put your price. So for this sake of situation, we're going to go ahead and we're going to do we'll just use this chart for our example. Just to actually let's make this. Let's go to 5 minute. Oh, let's go on 1 minute chart. We're just going to make this a real scenario, a real time thing here. And those of you who follow me, you know how I do. I don't necessarily like paper trading. It can be useful for some people, but you're not going to get the hang of trading until you go in there and you do it for real, with real money at risk in the market. All right, so and this screen is not letting me do what I need to do. So let's do this. Oh brother, let's see. And I'm not the thinkorswim expert by any means, but I just want you to see. All right, let's just do it. We're at 8:53 now. So all right, let's look at. Let me go back to. Let's go back to this one. Okay, here we go. All right, here we go. So in this one, we're going to put our order in at, let's say, 875, just for right now. So 875. Excuse me. Okay, 875. Okay, my stop automatically put it $1 away. We'll let that go. All right, so here's my pulse wave. Let's say the pulse wave was 875. That's what we're going to put it in at. All right, come over here to order. Click. See this drop down menu? You have market, limit, stop, stop limit, trailing stop, limit, MOC, market on close, LOC, limit on close. All right, we want stop. Okay. When you do that, you're telling the market, the platform, when 875 is hit, turn this into a market order and get me in the market, and that's what it's going to do. The stop, once the stop is triggered, it basically turns into a market order, and that's what you want it to do. All right. Now the market if touched, I don't have that in mind on my drop down. I suppose if I wanted to, I could add that or whatever, but for my stated purpose, the market if touch, you're not going to really need to use that. You would only need to use that in certain situations, like for instance, I know the NASDAQ and the New York Stock Exchange no longer accepts stops, which is ridiculous. It's insane. So in that situation, if you were going to do that, if you were trading through them directly, then you would have to, use basically market and limit orders, and then that's when the market of touch would be helpful for you. But when you deal with brokers like, TD Ameritrade, Thinkorswim, you can still use stops with your broker. Your broker will hold the order and then execute it once they will take care of the stop for you. So that's a good thing. So and most brokers still will allow you to do that. So I can still trade NASDAQ stocks and New York Stock Exchange stocks and use a stop, and my broker will hold the order and execute it, that way. Because the NYSE won't hold the order if it's a stop, and they won't hold it on the NASDAQ. So that's the benefit you get. So anyway, okay, so here we are on a stop. When you come over to this TIF, okay, you're telling it, what do you want? Do you want a day order, or hit the drop down, or do you want a good till canceled order? Good till cancel orders are open orders. They're open and they're going to execute during normal regular trading hours until the trading session closes for the day. And then it will, wait until the next day, and it will re-enter that order for you. It's going to constantly keep that order working in the market for you until the trade is executed or until you decide to cancel it. Come down here, the EXT is extended hours, and the GTC EXT is good till cancel order in the extended trading session only. So if I was to make this extended, okay, both of the top and the bottom have to be the same in order, or you're going to get an error message. All right, so now I'm telling the computer, I want this order to work, but I only want it to work in the extended trading session after hours. And that's what it'll do for me. All right, and when that session is closed and over, this order dies. It's not going to re-enter it. I would have to make it an open order during the extended trading hours for that to happen. One note, in the extended hours, you can't use stops either. You have to use markets and limit orders. So keep that in mind as well. All right. So let's go back over here to day, which will make this a day order for this. And then we're going to go ahead and we're going to hit confirm and send. So you're good now. You got your price in there. You got your stop in there. And you're entering on a stop. And you're entering as a day order. Hit confirm and send. Then this thing comes up. All right, this is your order confirmation dialog, okay? It tells you what the order description is. You're buying. It tells you how you're doing it. The STP, you're buying 100 shares of this stock with the stop. And your stop is at this price to sell it. This right here, cost order, including commissions. It tells you how much it costs. And if there's a credit, it gives you that too. Cost of the trade, including commissions. Buying power effect. Buying power effect is very important. It's extremely important because this tells you how much everything's going to cost. It tells you. So in this particular transaction, it's going to cost me $267 that they're going to take away and set aside from the account and put it under the margin part of the account. All right. And then here's the resultant buying power for stock and result buying power for options. So it's just letting you know, what's what. Okay. Then here's a little disclaimer. With stop orders, there is no guarantee that the execution price will be equal to or near the activation price. Because what happens is once the market is once your trade is triggered, it acts as a market order. That's why. And in fast market situations, those of you who've been following me for some time, you heard me say, in a fast market, they do not have to fill you. They don't have to guarantee you a fill, even on a market order. All right, because it's a fast market. So you can be filled at any price, and usually it's the worst price, price possible. But there have been occasions where I never got a fill. I did not get a fill. So just keep that in the back of your mind. All right, so when you're ready, you go ahead and hit send. And then your screen looks like this. Now it's showing you, it draws a line, letting you know where, it's almost like a trend line, if you will, letting you know this is where you're going to be buying it, and then here's where your stop is. And that's it. That's all there is to it. That's how you enter your trades with the pulsewave system and the thinkorswim trading platform. All right, just so you know, we always enter the market on stops. We always exit the market on stops, except for special circumstances where we would use market orders or limit orders. But for the most part, we always enter and exit the market with a stop, period. And we always enter our trade that way with the conditional order with the stop, so that the stop is automatically placed simultaneously when the trade is placed as well. All right, that's how we do it. And for a stop in reverse, you do the same thing. You would enter this same order but in reverse. You would go in and you would enter to sell, and let's go ahead and walk through it real quick. Hit the sell thing here. All right, this is the quick way. This doesn't attach your stop. You have to walk through a thing on it. So close, that's not what I want. Go back to the sell custom with the stop, and we just do the thing in reverse. I want to sell 775, put our stop at 875. We want to do this with a stop, okay? And you want to go ahead and you can leave that as a day order, or you can leave it as a good till cancel. You know, it's up to you. Come down here. Oh, we gotta adjust it because we are doing 100 shares. So let's do this here. All right, so there we go. Now confirm and send. All right, same thing. It's telling me what I'm doing here. This is what it's gonna cost me, and then we're going to hit send. Entering this order will cancel your open working orders. Okay, so for the equity side of things, it's letting me know that it's going to change my other open orders. All right, so in this situation, you probably want to wait and do the opposite trade. Once this one's triggered, then you can go in and you can modify that, and you can do that. All right, so that's it in a nutshell. That's how you place orders on the thinkorswim platform. And go ahead, knock yourself out. Place your first trade and, you know, get your feet wet. The mouse. When you right click on the mouse, you see this comes up. See buy, sell, buy custom, sell custom. All right, if you click on the buy custom, you have OCO bracket, stop, and stop limit. That's what you would do. You would look at your pulsewave report for the week, and you would go ahead and put your order in as so. Okay, so in this case, you're going to go in. You're going to do a trade. So you put your mouse on the bar here, and you go ahead and right click on the, regardless of what broker you're using with, just to give you an idea of the different order types. All right, we're going to use Pretty Ricky as our example. As you can see, if you look at your current pulsewave report for this week, okay, this is a quick tutorial on how to enter orders for the pulsewave system into the thinkorswim trading platform. I know that your broker may be different than this, but this is primarily, the way it's going to be done is use the one with the stop. All right, so in our example, that's what we're going to do. Okay, this screen now comes up here at the bottom, your order entry and saved orders. Okay, you can default to however many shares you want. I have mine defaulted to 500 shares. All right, so that's just